The big industrial slowdown. Maybe not. The largest manufacturing and construction companies should be battening down the hatches if a recession is on the way, but the story could be a little different this time around. One reason is President Biden's trillion-dollar infrastructure law signed in 2021, and it made improving the nation's roads, ports, waterways, and airports a priority. So is this going to be a big enough boost for the sector and related industries like logistics? Yahoo Finance's Seana Smith is at the Goldman Sachs Industrials and Materials Conference, speaking with leaders on what this current economic climate means for their businesses. She joins us now with Drew Wilkerson, who is the CEO of RXO. Seana.
Thanks so much, Brad. Yes, I'm joined by Drew Wilkerson, the CEO of RXO truck brokerage business. Drew, thanks so much for joining us here today.
Thanks so much for having me. It's great to be here this morning.
So lots of talk at this conference over the last day and a half about where we stand in the economy right now. We're in the midst of lots of talk about a freight recession. What are you seeing from your perspective?
Yeah, overall, it's a tough macro environment right now. If you look at what you're seeing in the transportation world, freight volumes are down as a whole. Now, for our business in the first quarter, we were actually able to grow volume by 6% on a year-over-year basis. We're able to do that because what you're seeing is customers, as their volumes are shrinking, they're consolidating their carrier base. So they're leaning into the partners that they trust the most, that have the best technology, and that have delivered results for them for a long time. So while it's a tough macro environment, we're still going out there and taking share, and we're doing that profitably.
Drew, last time you were on Yahoo Finance just a couple of months ago, you said that there were reasons to be optimistic about the second half of the year. It sounds like the business is trending in the right direction. Is that still the case?
So if you think about whenever I was on last quarter, one of the things that we talked about was customers were only, especially in retail and e-commerce, were only talking about destocking their inventory. Now they're talking about how their inventory is restocked, and we have to be able to get the orders out to the end consumers. We've seen strong trends in the technology and the healthcare verticals. So there are reasons for optimism as we look towards the back half of the year.
What are you seeing from some of your retail clients? I know some of your customers include Dollar Tree, Costco, just to name a few there. How are those conversations going, and what are you seeing as their needs, at least in the short term?
Yeah. Volume for retail and e-commerce for us is down on a year-over-year basis, but it is decelerating from where it was down in the fourth quarter, and we are starting to see those inventory levels at a more normalized state. So it's a little bit easier comps for us as we get into the back half of the year.
When we talk about pricing, obviously inflation, a big focal point for CEOs across the industries here, but for your business, we just got that print this morning, 4.9% year over year, slight improvement. How big of an impact has inflation had on RXO?
Yeah, so specifically in retail and e-commerce is where we saw volumes go down, and that inflation was a big driver there. As you talk about pricing, we've seen our contractual pricing go down anywhere from 10 to 15% on a year-over-year basis. And our spot pricing, meaning whenever carriers are rejecting tenders and they're coming out on spot boards, we've seen that pricing even fall below that. But one of the things that we've done to protect ourselves is we're also pulling down our cost of purchase transportation, which is how we were able to keep our margins flat on a year-over-year basis.
Drew, lots of talk, more macro speaking, about the showdown going on right now in D.C. over the debt ceiling. From your perspective as a CEO of RXO, how are you looking at uncertainty like that?
I think the one thing that we've learned over the last couple of years is that we've got to be agile and flexible and be able to adapt to all different types of markets. And we've been able to show that. We've shown that during the upturn during COVID, whenever you saw retail and e-commerce take off, that we were able to flex up our capacity and meet customers' demand. And is what you're seeing right now in a softer environment, we're not just holding on to what we're having, we're taking share and we're doing it forward, moving the ball forward. A lot of that is because of the technology that we put in place at RXO that is highly integrated with our customers.
One of your priorities here has been your investment in technology. Lots of buzz over the last several months about AI, a space that you have been involved now in for quite some time. How is your investment in AI? How does that position your company? What's the edge that it gives you?
Yeah, so we've been investing in AI for over a decade. And so if you think about the pricing algorithms that we've got that allow us to have best-in-class margins, it's because with every load that goes into the system, our algorithms get that much smarter on a pricing perspective for both the customer and the carrier. So it allows us to give real-time, accurate pricing to customers and carriers. We're also using AI for customer integrations, and so something that we've got a good runway left to go there.
Drew, when it comes to lots of talk about AI disrupting jobs here, the impact that's going to have on workers. In just the last week, we heard from IBM, from PayPal, that AI will replace their need for some workers. Is that the case with RXO?
It's not really how we look at the business. So what we see is that we're able to have our employees be able to do more per day. So what we measure is the loads per day. And so technology and AI allows them to do more per day versus elimination of the jobs.
When it comes to the workers, finding the workers that you need, obviously labor shortage has been a huge challenge specifically for your industry. What are you seeing?
Yeah, so we're still seeing a lot of talent come to us, specifically on our folks that are dealing with the carriers and the customers on a daily basis. And they tell us that they want to come to us because they want to come to a winning team that's disrupting an industry and this outperforming the overall industry. So talent has not been an issue for us on the carrier and the customer side. Technology talent is always a difficult, but we've been able to pull some of the best and the brightest minds across the biggest technology companies to help us create a winning platform in RXO Connect.
Has that been holding back your business at all? The fact that finding the workers with the right skill set in the technology area, that has been a little bit tougher?
No, it has not. It has not held us back, and you can see that because we're not only growing volume by 6% on a year-over-year basis, we've got the best margins out there within the industry, and so it has not held us back.
Your number one challenge right now for the remainder of the year, what would you say that is?
Yeah, so, obviously overall watching the macro and the uncertainty that is still there. While there are reasons for optimism in the back half of the year, the macro environment's still an uncertain one, and being able to react and be able to continue to go out and outperform the industry and take market share.
Drew Wilkerson, always great to have you here, Yahoo Finance CEO of RXO. Thanks so much for joining us.
Thank you for having me.
Julie.